Hi everybody, it's FIBO Group and you are watching to the Market Watch review. The new week begins on a solid note for bonds and equities as well as the dollar. In the Asian Pacific region, equities in New Zealand, Australia, Japan, and China advanced. Europe's Stoxx 600 is in a 3-day slump, while U.S. futures are 0.25 to 0.35% higher. The dollar is on the rise against all major currencies, and it is 0.3% to 0.455% higher against most. Sterling and the Canadian dollar are the most resilient. The Chinese yuan continues its struggle to gain a little value among emerging market currencies. After dropping 4% in the initial period, the Turkish lira has lost more than 2%. Gold is steady at the upper end, above $1,780. January WTI is stable, but it has been capped at the 20-day moving mean $72.80. After falling 5% last Wednesday, U.S. natgas is now firm. Asia-Pacific market. The new government, the vaccination programs, and fiscal stimulus are all helping to fuel the economic recovery. However, the results of the Tankan survey show that businesses are still not convinced that there is significant change. The U.S. dollar remains within its recent range against the Japanese yen, JPY 113.20 to 113.95. It is currently trading at the top end of its range and has not traded higher this month. The rally of the Australian dollar stalled at $0.7185 last week. It is currently testing the lower end $0.7130 in the European morning. The $0.7090 to $0.7115 region is where support can be seen. After 3 months of declines in COVID, the highlight of the week will be the November jobs report. It is expected that it will show a strong rebound. European market. Many sides are putting pressure on the UK government. Recent polls show that Labour is ahead of the Conservatives. The UK attitude toward the EU and the threat to the Good Friday Agreement have caused some discord among the US government. Trump has not lifted his steel and aluminum tariffs, and instead put much effort into a free trade agreement between the special allies. Sterling closed at its highest point before the weekend and is now on the defensive. The year's low was December 8th at $1.3165. However, the current support is about $1.3220. Last week, the euro reached a peak of $1.1355. Today, it has fallen to $1.1260 at a 4-day low. The year's lowest was reached on November 24 at $1.1185. Last week, it was just below $1.1230. The euro is vulnerable due to divergent impulses from the Fed and ECB. American market. The FOMC meeting is the highlight of the week. Nearly everyone believes that the Fed will accelerate its tapering. Individual forecasts are expected to shift in line with the more hawkish rhetoric since the October CPI print rose above 6%. The CPI for November, which was reported at the close of last week, increased to 6.8%. The U.S. reports PPI before we move on to the FOMC meeting. Although the heading is expected above 9%, the core is above 7%, and November retail sales are expected to grow by around 0.8%, which is a significant increase from the 1.7% pace in October. The U.S. reports November housing start, industrial production, and the Philly Fed's December survey after the FOMC meeting concludes midweek. Thursday is also the due date for preliminary December PMI estimates. That's all for me. Closely monitor the news background and be prepared for all the surprises of the market.